Hello students, in present video I am going to explain about fifth problem from final accounts topic. I am making this video for degree students. I am taking this question from Kalyani Publications. Authors Jain and Naran. Previous problems videos links are available in the description box. Let us see the question first.
Record the following adjustments in Sri Prabhakar's journal on 31st March 2016. A. The stock on 31st March 2016 of raw materials was of the value of 1 lakh rupees and that of finished goods of 1,50,000 rupees. B. 20,000 for wages and 5,000 rupees for printing were outstanding. C. 2,000 for insurance, personal, and 10,000 for income tax were paid in advance. D. Right of depreciation on machinery 50,000 rupees and on buildings 20,000 rupees. E. 15,000 were received in advance for commission. If before making the above adjustments, his net profit for the year ending 31st March 2016 was 25,000 rupees, what will be the net profit for the year after making the above adjustments? This is the question.
In present problem, two questions is asking. First one, record the following adjustments in Sri Prabhakar's journal on 31st March 2016. So adjustment entries is asking. Second one, if before making the above adjustments, his net profit for the year ending 31st March 16 was 25,000. What will be the net profit for the year after making the above adjustments? So after writing adjustment entries, what is the effect of these adjustments on net profit? That question also he is asking. See the first point. The stock on 31st March 2016 of raw materials was of the value of 1 lakh rupees and that of finished goods of 1,50,000 rupees. On 31st March 2016, there is closing stock. So current year last date is 31st March 2016. Starting date will be 1st April 2015. So for 2015 and 16, we are writing these adjustment entries. In final accounts, where we show this, he is giving closing stock of raw material, closing stock of finished goods. Closing balance of raw material is given in the question. Means we should understand that this is a manufacturing concern. So manufacturing concerns final accounts include manufacturing account, trading account, profit and loss account and balance sheet. But generally nowadays manufacturing accounts are not preparing manufacturing account. So manufacturing related expenses also they are showing in trading account only. So my assumption is they are preparing trading account, profit and loss account and balance sheet as their final accounts. So raw materials and finished goods closing values. In trading account credit side they have to show and in balance sheet asset side. Trading account credit side by stock of raw materials. Amount is 1 lakh rupees. Next, by stock of finished goods 1,50,000 rupees. Second time, in balance sheet asset side also these two values appear. Stock of raw material 1 lakh rupees. Stock of finished goods 1,50,000 rupees. So if we want to credit a stock of raw material, stock of finished goods to trading account, what should be the journal entry? We should think that. So that entry is known as adjustment entry. In trading account, credit side we want to post these two. Then while writing the adjustment entry, we should credit trading account. And which accounts we should debit? In particulars column we wrote stock of raw material, stock of finished goods. These two accounts we should debit. So this is the final adjustment entry. Stock of raw materials account data 1 lakh rupees. Stock of finished goods account data 1,50,000 rupees. To trading account 2,50,000 rupees. As trading account is credited, in trading account credit side we have to post this. Buy stock of raw material, buy stock of finished goods. And the doubt is, why stock of raw materials account and stock of finished goods account are debited? These two values I want to show under asset side of balance sheet. When we show one account under asset side of balance sheet, if that account shows a debit balance, if any account shows a debit balance, there are two possibilities. We can show that account as an expenditure or loss. Means in trading account debit side or in P&L account debit side we can show that. Otherwise, we can show that account as an asset in balance sheet. So these two values I want to show in balance sheet under asset side. Therefore, these two accounts should show a debit balance. If you write this adjustment entry, then in stock of raw material account, which side it will be posted? In entry, stock of raw material is debited, no. Therefore, debit side it will be posted. What to write in particular column? To trading account. Amount, stock of raw materials amount, 1 lakh rupees. Similarly, in stock of goods account also, that entry will be debited because in entry stock of finished goods account is debited. So debit side. What to write? Other side. Trading account is there. To trading account. Amount, stock of finished goods amount, 1,50,000 rupees. If you post this entry on debit side of these two accounts, which side balance carried on comes in these two accounts? Credit side. Because debit total is more than credit total. So credit side by balance carried down, 1 lakh rupees. Two sides totals. In finished goods account also, credit side by balance carried down, 1,50,000 rupees. Two sides totals. So which balances these two are? Debit balances. Don't think that credit side we wrote balance carried down means this is credit balance. So debit total is more than credit means this balance is a debit balance. So these two accounts are showing debit balances. Then we can show them under asset side of balance sheet. That is why in adjustment entry we are debiting stock of raw materials account and stock of finished goods account. Journal of Sri Prabhakar. Serial number, particulars, ledger folio number, debit, credit. First entry is stock of raw materials account data, stock of finished goods account data to trading account. Amounts 1 lakh, 1,50,000. Total in credit column 2,50,000. Narration is being entry for closing stock. B adjustment 20,000 for wages and 5,000 for printing were outstanding. Outstanding wages 20,000, outstanding printing 5,000 rupees. So here wages, printing, these two are expenses. So wages in trading account debit side we should write because wage is a direct expenditure to wages. Similarly, printing is indirect expenditure. It appears on debit side of profit and loss account. This is trading account, this is profit and loss account. To printing. Assume that in trial balance wages 50,000 is given. Then in inner column 50,000 we should write. To this outstanding wages 20,000 rupees. Outstanding wages means what? More 20,000 wage we should pay. So for current year, for 2015-16 year, total wage expenditure is 70,000 rupees. In this 70,000, 50,000 firm paid in current year. 20,000 is outstanding. So in next year we are going to pay that 20,000 rupees. But that expenditure belongs to current year, no? So we prepare trading account to know the gross profit or gross loss. If you want to know current year gross profit or gross loss, all expenses, all incomes of current year we should record in current year accounts only. Therefore, even though this wage 20,000 we pay in next year, we have to show that outstanding expenditure in current year only. Therefore, to this 50,000 outstanding wages, we should add 20,000 rupees. Total in outer column 70,000. Similarly, assume that in trial balance printing expenditure 30,000 is given. and in adjustment he is giving outstanding printing 5,000. We should add plus outstanding 5,000 rupees. Total printing expenditure in outer column 35,000 rupees. And in balance sheet, how to show this? Outstanding wages we have to pay. Liability, no? On the liability side, outstanding wages 20,000 rupees and outstanding printing 5,000 rupees we should show. This is accounting treatment. If you want to show like this, what should be the adjustment entry? That he is asking. For that, remember one rule. Wage, printing, both are expenses, no? So expenses related accounts always show a debit balance. Therefore, while writing the adjustment entry, if you want to increase that expenditure, you should debit that expenditure account. If you want to decrease that expenditure, while writing the adjustment entry, you should credit that expenditure account. First of all, expenditure account always shows a debit balance. What is the meaning of this? See, wages paid 50,000 rupees. No? What is the journal entry for that? Wages account debtor to cash account 50,000 rupees. In wages account, which side we should post this entry? Wages are debited, therefore debit side. To cash account 50,000 rupees. Similarly, printing expenditure 30,000 we paid now. What is the journal entry for that? Printing account debtor to cash account 30,000 rupees. In printing account, which side we should post this entry? Printing account is debited, therefore debit side we should post. To cash account 30,000 rupees. Now balance these two accounts. Debit side we have amount, therefore balance carried down comes on credit side now. By balance carried down 50,000 rupees. Two sides total. In printing account also, credit side by balance carried down 30,000 rupees. Two side totals. In these two accounts, credit side balance carried downs are coming. So which balances these are? Debit total is more. Therefore, these two balances are known as debit balances. Wages account is one expenditure account. It is showing a debit balance. Printing account is also an expenditure account. It is also showing a debit balance. So remember, whatever may be the expenditure account, it shows a debit balance. And outstanding expenditure means we want to increase the expenditure now. See, wages paid 50,000. 20,000 I want to add to this 50,000. So in final accounts, I want to take 70,000 as wage. Here, instead of 50,000, I want 70,000 as balance carried down in wages account. Then, that 20,000 we said we should write debit side. Then, debit total is 70,000. So, balance carried down becomes 70,000 rupees. So from 50,000 to 70,000, I want to increase wage. In that case, wages account should be debited with 20,000. No? So if we want to increase any expenditure, then that expenditure account should be debited. No? And what to write for this 20,000? This 20,000 is what? Outstanding wages. To outstanding wages. Similarly, in printing account, I want 35,000 as balance carried down, because in final accounts to 30,000 I want to add this 5,000. So total printing 35,000 I want to show in P&L account. Then balance carried down 35,000 we need. Then that 5,000 we said we should write debit side. Then total becomes 35,000. Balance carried down also 35,000. What to write for this 5,000? This 5,000 is what? Outstanding printing. To outstanding printing account. So based on these two postings, let us frame the journal entries. In wages account, debit side we posted outstanding wage 20,000. If you want to post like this, entry should be wages account debtor to outstanding wages account. Amount 20,000 and 20,000. Similarly, in printing account debit side we want to post to outstanding printing 5,000. Then what should be the journal entry? Printing account debtor to outstanding printing account 5,000 and 5,000. So wages account, printing account. These two are expenses related accounts. I want to increase wage with 20,000, printing with 5,000. So expenditure account I want to increase. Then while writing the adjustment entry, expenditure name should be debited. That is why wages account is debited with 20,000. Printing account is debited with 5,000 rupees. And why we are crediting outstanding wages and outstanding printing? Outstanding wage is a liability. Outstanding printing is also a liability. Let us post these two entries in outstanding wages account and outstanding printing account. First entry, outstanding wages are credited. Therefore, credit side we should post. What to write in particulars column? We debited wages account of that one. By wages account, 20,000 rupees. See the second entry, printing account debtor to outstanding printing account. Outstanding printing account is credited. Therefore, in outstanding printing account, credit side we should post this entry. We should write by printing account. Amount 5,000 rupees. Then which balance these two accounts show? Credit side 20,000 is there. Means balance carried down comes on debit side, two side totals. In outstanding printing account, credit side 5,000 is there. Then balance carried down comes on debit side, 5,000 rupees, two side totals. So which balances these are? Debit side balance carried downs are coming. Means credit total is more than debit total. Means these balances are known as credit balances. If any account shows a credit balance, we may show that as an income or gain or as a liability. If you show this as an income or gain in trading account credit side or in profit and loss account credit side we should show. If you show this as a liability in balance sheet under liability side we should show. So outstanding wage, outstanding printing, these two are liabilities. In balance sheet under liability side we want to show that. Therefore, these two accounts should show a credit balance. If you want to have a credit balance in these two accounts, while writing the adjustment entries, we have to credit these two accounts. That is why we are crediting outstanding wages account and outstanding printing account. So wages account is a nominal account. Outstanding wages account is not a nominal account. It is a personal account. Because wage we have to pay to a particular labor. Means indirectly one worker's name we are writing here. If any account is representing a person or firm's name, that account is known as a representative personal account. And these representative personal accounts are credited. If any personal account is credited, then the meaning is that account is a liability. If a personal accounts are debited, then the meaning is that a personal account is an asset. Why these two are liabilities? Because we have to pay. So other person becomes a creditor to us. Creditor is a liability. Liability shows a credit balance. Therefore, we are crediting outstanding wages account and outstanding printing account. So instead of showing outstanding wage and outstanding printing separately, we can show these two outstanding amounts in one account only. Then that account name is outstanding expenses account. So instead of writing two separate entries, we can write only one entry for this. Wages account debtor, printing account debtor to outstanding expenses account. Wages account 20,000, printing account 5,000, outstanding expenses account 25,000. Wages account debtor, printing charges account debtor to outstanding expenses account. Wages 20,000, printing charges 5,000, outstanding expenses 25,000. Narration: being wages and printing outstanding. C adjustment: 2,000 rupees for insurance, personal, and 10,000 for income tax were paid in advance. This is sole proprietorship business. So for sole trading concern, insurance personal means the owner of the firm has taken life insurance policy. So he has to pay premium. That premium amount he paid from this business amount. So 2,000 rupees he withdrew from the firm for his personal purpose. Similarly, for sole proprietorship business, income tax is an expenditure of owner. This is personal expenditure of owner. So owner is doing some job. On his salary, he has to pay income tax to the government. So from this business amount, he is paying that income tax. So from the business, he withdrew 10,000 for his personal purpose. So these are two expenses or personal expenses of the owner. First entry is, there are two expenses, insurance and income tax. Expenses come under nominal accounts. Nominal account rule: debit all expenses and losses, credit all incomes and gains. Therefore, these two expenses we should debit. Insurance account debtor. This is not business related insurance premium. This is personal insurance premium. That is why in brackets we mentioned personal word. Insurance account debtor, amount 2,000 rupees. Income tax account debtor, amount 10,000 rupees. 2. From the firm he is withdrawing the money, and with that amount he is meeting these two expenses. So from the firm cash is going. Cash is an asset. Assets come under real account. Real account rule: debit what comes in, credit what goes out. From the firm 12,000 cash is going. Therefore we should credit cash account 12,000 rupees. If you write only one entry like this, it gives a meaning that these two are business related expenses. For example, salary is paid. Entry is salary account debtor to cash account. So here salary is debited. It gives a meaning that it is a business related expenditure. But these two are owner's personal expenses, no. Therefore, we should not debit like this. So we have to transfer these two amounts to drawings account. So from the firm, if owner withdraws some amount for personal use, it is known as drawings. So these two accounts we have to close by transferring their balances to drawings account. For that second entry we should write. How we created insurance account? By debiting. If you want to cancel this account, you should credit that to insurance account. We created this account with 2,000 now. So we should cancel with the same amount, 2,000 rupees. Similarly, we created income tax account by debiting that account with 10,000. If you want to cancel this account, we should credit that account with the same amount to income tax account, 10,000 rupees. These two accounts we should close by transferring the balance to drawings account. Therefore, drawings account should be debited. These two amounts total 12,000 rupees. So finally, these two entries we should write. What is the end result of these two entries? Insurance account is debited and credited. So as a result of this, these two accounts will get cancelled. Income tax account is also same now. We debited once again we credited. So these two accounts will get cancelled. Finally, we have drawings account on debit, cash account on credit. So final entry is drawings account debtor to cash account 12,000, 12,000. Under CB, two entries. First one, interest account debtor, income tax account debtor to cash account. Interest 2,000, income tax 10,000, cash 12,000 rupees. Narration, being personal expenses paid. Second entry, drawings account debtor to interest account to income tax account. Interest in credit column 2,000, income tax 10,000, total in debit column 12,000 rupees. Narration, being personal expenses paid debited to drawings account. D point, write off depreciation on machinery 50,000 rupees and on buildings 20,000 rupees. So machinery, building, these two are fixed assets. When we use fixed assets continuously, assets value decrease. So that is a loss. That loss is known as depreciation. So depreciation we have to provide. For that, one adjustment entry is needed. So depreciation is a loss. Losses come under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Depreciation is a loss now, so we should debit depreciation account. Depreciation account debtor. 2. We are providing depreciation on machinery and building. Machinery account is a real account. Building account is also a real account because these two are assets. Assets come under real accounts. Real account rule, debit what comes in, credit what goes out. So from machinery value, 50,000 is decreased. Means 50,000 worth of machinery is going from the firm. It gives that meaning only. From building value, 20,000 is decreasing. Means 20,000 worth of building is going from the firm. So credit what goes out is applicable. Therefore, we should credit machinery account with 50,000 rupees. We should credit buildings account with 20,000 rupees. So total depreciation 70,000 rupees. D. Depreciation account debtor to machinery account to buildings account. Machinery 50,000, buildings 20,000, total in debit column 70,000 rupees. Narration, being depreciation written off. E point, last one. 15,000 were received in advance for commission. Commission received in advance 15,000. This is the adjustment. So commission received is an income, indirect income. It appears on credit side of profit and loss account by commission received. Assume that in trial balance commission received 60,000 is given. So that amount in inner column. Commission received in advance means what? Next year commission is received in current year only. So in 60,000 rupees, next year commission 15,000 is also included. Why we are preparing final accounts? To know the current year profit or loss. To know the current year financial position. So if you want to know current year net profit or net loss, only current year expenses, current year incomes, we have to show in current year P&L account. Next year amount is also included in this amount. So we have to subtract that. Minus received in advance 15,000 rupees. So current year commission 45,000 rupees in outer column. And in balance sheet we said we should show next year income now only we received. Means we are liable to other person. So without giving the benefit to them, we received commission from them. Means firm is liable to them. It is a liability. Income received in advance is a liability. Income to be received is an asset. So this is a liability. Liability side, commission received in advance 15,000 rupees we should show. So if you want to record like this, what should be the adjustment entry? That is asking. For that, remember this rule. Commission received is an income now. Income accounts always show a credit balance. If you want to increase that income, you should credit that income name while writing adjustment entry. If you want to decrease that income amount while writing the adjustment entry, you should debit income name. Commission received 60,000 now. What is the journal entry for that? Cash account debtor to commission received account. Amount 60,000 rupees. In commission received account, we said we should post in journal entry, commission received account is credited. Therefore, credit side we should post. By cash account, 60,000 rupees. Then we said balance carried down comes, credit total is more than debit. Balance carried down comes on debit side. To balance carried down. Two sides totals. Now, this balance is known as a credit balance because credit total is more than debit total. So that only I wrote here. Commission received account is income account now. So income account shows a credit balance. Means credit total will be more than debit total. So debit side only balance carried on comes. And in present problem, I want to decrease this income with 15,000 rupees. So instead of 60,000 rupees, I want 45,000 rupees here. So if I want 45,000 rupees as balance carried down in commission received account, then 15,000 we said we should post. Debit side. Then 60,000 minus 15,000 will become 45,000 rupees. So 15,000 should be debited to commission received account. What is this 15,000? Commission received in advance. In particulars column, that account name we should write. To commission received in advance account. So what should be the journal entry for this? In commission received account, debit side we want to post 15,000. Then while writing adjustment entry, commission received account should be debited. Commission received account debtor 15,000 to. In particulars column we wrote commission received in advance account. No? Write down that. To commission received in advance account. 15,000 rupees. This is the adjustment entry. Why we are debiting commission received account? I want to decrease commission income. So income shows a credit balance now. If I want to decrease that income, while writing the adjustment entry, income name should be debited. Here income name is commission received. Therefore, commission received account we are debiting. So don't confuse between transaction entry, adjustment entry. Transaction entry is commission received, cash account debtor to commission received account. Why commission received account is credited? Because commission received account is a nominal account. Income no? Nominal account rule. Debit all expenses and losses, credit all incomes and gains. As commission received account is an income account, we are crediting this as per nominal account rule. But while writing adjustment entries, we should not use those nominal account rules. So commission received is an income. Even though it is an income, we are debiting because I am not following nominal account rule here. So income account balance I want to decrease. Then income account should be debited. That is why I am debiting commission received account. And why we are crediting commission received in advance account? It is a liability. Liability shows a credit balance. Means when we prepare commission received in advance account, this entry we said we should post. Commission received in advance account is credited now. Therefore credit side we should post. By commission received account 15,000 rupees. Then we said balance carried down comes debit side to balance carried down. Two sides total 15,000 rupees. So which balance this is? Credit total is more than debit total. Means this is a credit balance. If any account shows a credit balance, it may be an income, gain or a liability. So if it is an income, in P&L account on credit side we should write, but commission received in advance is not an income, it is a liability. So this account is a liability account. So liability should show a credit balance. Means in commission received in advance account, credit side total should be more than debit side total. Then only it shows a credit balance. Means 15,000 credit side we want to post. That is why while writing the journal entry, we credited commission received in advance account. Last entry, commission received account data to commission received in advance account. Amount 15,000, 15,000. Narration, being entry for commission received in advance. Two questions is asking now. First question is writing adjustment entries. Completed. Second question is, if before making the above adjustments, his net profit for the year ending 31st March 2016 was 25,000 rupees, what will be the net profit for the year after the above adjustments? So before these adjustments, net profit is 25,000. After making these adjustments, what is the net profit? That is the second question. For that, you have to remember these important points. So when we prepare trading account and profit and loss account, you know these two accounts are nominal accounts. So as per nominal account rule, expenses and losses we show on debit side, incomes and gains on credit side. So in trading account debit side, direct expenses, direct losses we show. In profit and loss account debit side, indirect expenses and indirect losses we show. Credit side, direct income, main income. All other incomes, indirect incomes in P&L account on credit side. And suppose debit side, because of this adjustment, say our expenditure or loss amount is increasing, then what is the effect on net profit? Net profit decreases. Because of one adjustment, if expenditure or loss decreases, then net profit increases. Similarly, credit side, because of one adjustment, assume income or gain is increasing. Then as a result of that, net profit increases. Because of an adjustment, if income or gain is decreasing, net profit decreases. So keep these points in mind. Heading is calculation of net profit after adjustments. So inner column, outer column. First you have to start with the net profit before adjustments, 25,000 rupees. To this, adjustments are there no? So because of one adjustment, if net profit is increasing, that adjustment amount we should add to 25,000 rupees. Add increase in profit because of adjustments. Similarly, because of some adjustments, if net profit is decreasing, we should show that adjustment as subtract. So decrease in profit because of means these adjustments from 25,000 we should subtract. Let us see the first point. The stock on 31st March 2016 of raw materials was of the value of 1 lakh rupees and that of finished goods of 1,50,000 rupees. These two are closing stocks now. So raw material closing stock is 1 lakh rupee, finished goods closing stock is 1,50,000 rupees. These two closing stocks in trading account credit side we show. So because of that, income is increasing. When income increases, net profit increases. Means these two amounts under additions we should show. Closing stock. Raw material closing stock 1 lakh rupees plus finished goods closing stock 1,50,000 rupees. Total 2,50,000 rupees. Next, 20,000 for wages and 5,000 for printing were outstanding. Outstanding wages In trading account debit side, to which we add means expenditure is increasing. Outstanding printing in profit and loss account debit side, to printing amount we add means expenditure is increasing. So because of these two adjustments, expenditure increases. Then what is the effect on net profit? Net profit decreases means these two adjustments we have to subtract from this 25,000 rupees. So we have to show here outstanding expenses, wages outstanding 20,000 rupees plus outstanding printing 5,000 rupees, total 25,000 rupees in inner column. Next, CBIT 2,000 for insurance personal and 10,000 for income tax were paid in advance. These two are owner's personal expenses now. So from the firm, owner is withdrawing some amount towards personal expenditure. So from the firm, cash is going. That cash will be shown in balance sheet. And these two are owner's personal expenses now. Means drawings. So drawings also appear in balance sheet only. So these adjustments affect drawings and cash. Both come in balance sheet. Means these two adjustments do not affect net profit. Therefore, we need not to consider while preparing this statement. Debit. Write off depreciation on machinery 50,000 rupees and on building 20,000 rupees. Depreciation. In profit and loss account, debit side we have to show now. Means because of depreciation, expenditure increases. Then net profit decreases. Means from 25,000 we have to subtract depreciation adjustment. Depreciation. Depreciation on building 20,000 rupees. Total 70,000 rupees in inner column. Last point E. 15,000 were received in advance for commission. Commission received, income, indirect income. In P&L account, credit side we should show that. And commission received in advance. From commission received we have to subtract. Because of that, income decreases. When income decreases, net profit also decreases. Therefore, commission received in advance we have to subtract from 25,000 rupees. We have to write here commission received in advance 15,000 rupees. So all adjustments we have written. Finally, add these two amounts and write down the total here. 2,75,000 rupees minus these three amounts total in outer column. 1,10,000 rupees. 2,75,000 minus 1,10,000 rupees is equal to 1,65,000 rupees. Therefore, net profit for the year ending 31st March 2016 after adjustments is 1,65,000 rupees. So this is the end of present video. Hope this video is helpful to you. Thank you.